Welcome, welcome, welcome. I am the FX Savant. If you've been here before, I appreciate you coming back. If you're new here, what I do here is provide you with the most useful, accurate, and free trading information using a multi-time frame analysis approach, as well as structure the right way. As well as sometimes I give you a glimpse of my life. Make sure the post notifications are on. It would be highly appreciated as it helps with the YouTube algorithm, as well as helping a new content creator. And while you're down there in the description, there will be a link to my free Telegram signals chat. Go ahead, join it. It's free. Why not? It's what we do over here. We give out free game. I'm trying to tell you. It's free. It's free to thumbs up. It's free to subscribe. It's free to drop a comment. It's free to get in the free signals. It's free. I'm giving out free game. Accurate. But yeah, it's free. So why not? Okay, so let's go over this Euro USD trade. And before we get into it, let me show you. Yes, you can see right there at 313, Euro USD, buy Euro USD at 17.28. At 1.7, 17.28, put our stop loss at 17.14, and then put our take profit at 17.75. So what do we do? Let's replay it. So we'll start it back on how I took this trade and how it played out. Normally, what do? We start with the monthly, weekly, and the daily. Correct. Yes, that is what we do. So this trade right here was a day trade. It wasn't necessarily a swing trade, and we wasn't looking for a long-term hold. This was something that I knew I was going to be in and out of within the day. So I did not start from the monthly. I did not start from the weekly either, but I did start from the daily. So to give you a better representation, let's just go back this whole day and we'll start fresh. Because what I did is I saw this trade the day before. So I didn't see this trade at 3 in the morning this morning. I saw it yesterday after this candle had closed. So let's start the analysis. What do we see? Well, I've spoken about this before. When you see a candle that closes about halfway and the wick on a bullish candle, the wick is to the upside, a long wick to the upside, and a bearish candle, it closes and there's a long wick to the downside. What do you expect? You expect the next candle to fill in that wick. Why? Because on a smaller time frame, that wick is a correction after an impulse. So on the daily, what did we have? We had the candle that the next one was supposed to fill in the wick. Now this is not just to be applied blindly. This is not to be taken blindly. There's more to it than just the candle that the next one's supposed to fill in the wick, take the next trade, because there's the candle that the next one's supposed to fill in the wick right here as well. And there's a reason as to why there wasn't a trade on this day. Matter of fact, let me just go back and I'll explain it to you. So before we get into the trade that we took, why didn't we take this trade, or why wasn't there a trade on this day when we have a green candle and a wick to the upside and we want to see the next candle fill in the wick? It's because, simply put, so at the end of this candle, the end of this day, yes, this day closed bullish. What I want to see is price break this the next day before I even think about getting into a long. So if we play it forward, it gets closed, comes up, but ultimately it never breaks this resistance. So in order for me to get in this trade, I would have had to have seen this market break this resistance area first before I even thought about getting to a buy. I want to see higher highs and higher lows being created. We did have some higher highs and higher lows created, but then we failed to break this high at the end of the day. We failed to make a higher high. And then, since then we started making lower lows and lower highs. So there was really no opportunity for me to get into a buy on this market. But with that being said, let's go back to what we had. Okay, so we had, on the daily, we had the candle, the next one's supposed to fill in the wick. Okay, on the 4 hour, what do we have on the 4 hour? Okay, my bad. So keep everything about this section. And then when I start what do we have? Market creating higher highs and higher lows. You can stop it from there and cut that section out. We don't need that section. When we come down to the 4 hour time frame, what do we have? On the 4 hour, I woke up at around 1 a.m. when this candle was closing. And what did I have? What did I see? So all the previous candles, I had the candle, the next one was supposed to fill in the wick on the daily. And on the 4 hour, I had this candle, which is the exact same candle.
It's 17:45.
Thank you. And when you see a candle like this, what do you expect? You expect the next one to fill in the wick. Now, this is not just taken blindly. This is not taking blindly. Why did I want to see the next candle fill in this wick? Because we're clearly in a downtrend. We've been breaking structure to the downside. But the next candle is supposed to fill in the wick on the daily. So there's still a possibility of pressure to the upside. So what did I see? When I woke up, I saw this candle and I saw to myself immediately, that price has created an inverted head and shoulders. We failed to make and break below the most recent low. So we failed to make a lower low in a market where we've been making lower lows and lower highs consistently. We failed to make a lower low. Then we rejected it to the upside, creating this candle that we want to see the next one fill in the wick. So now on the hour, what do we have on the hourly time frame? I think after I saw that, we jumped straight down. On the hour, what do we have? Price that had just created an inverted head and shoulders. So here's the left shoulder, here's the head, here's the right shoulder. We just created an inverted head and shoulders, and which is a bullish pattern to where you want to see price break above the neckline, which initially would be here, and then come back and retest it. But we also had an overextended W formation. I know we've heard me talk about that before. Price moved down, moved back up, price moved down, moved back up. So price broke the structure. What do you want to see after an overextended W formation? You want to see price come retest the neckline and then create the impulse to the upside, because this in itself is an impulse and a correction. So with that on the hour, what did we have on the 15? On the 15 minute, same thing, price had just broke above. So now the candle broke. I didn't really, this could have been a tough call. Did it break above and close above the area? Depends on where you took it. Depends on where you put your zone. I mean, not really. But I wanted to see this candle come back down and retest this area. Retest this area and stop, because this is structure. Then I dropped down to the 5-minute time frame, where the structure you could really see that this support was holding. So this support right in here had held. When this candle closed bullish like it did, that was when I sent out the signal. So as you can see, right now it's 310. Signal has not been sent out. Next candle, boom. 313, 315, 313 prices down here somewhere. Sent out the candle. We're entered into the market here. Second video. My bad on the first video. It's kind of long, a lot of dead stuff you don't need. But said I wanted to see price hold right here as support. Now this broke above it. Now the reason for entry, we were entered in right here. We had our price triggered our entry. Why was our entry right here? Well, if we look, this is most recent resistance turn support. Okay, so price broke above it, broke back below it, broke back above it. Even though this is resistance, it hadn't really been getting respected. It's been broken above and broken below and broken back above. It was respected here, respected here, respected here, respected through here, through here, through here, through here, through here. So this is an area of importance if we're going to move to the upside and we're creating higher highs and higher lows. This would be the area in where we started to create lower lows if we were going to continue in our downtrend. But since we expect the next candle to fill in the wick, which is not in itself a strategy, please do not go out and just see candles that have the next one that's supposed to fill in the wick and start to just place trades and targets and stops and do all that and come back and say, hey, Bud told me that this happens, and it doesn't happen. So that's not a strategy within itself. That is a component, that is confirmation, using it as confirmation, as well as a lot of other things. So we want to see price breaking structure to the upside is another confirmation. Price has been breaking structure to the downside all through here. We've been making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, breaking structure to the downside until we got to this point to where we started to make structure break to the upside. Well, we didn't. Price started to break structure to the upside. It broke above this structure level, broke the resistance, used it as support, and then it broke above this structure level, which the market had found resistance here, then broke back above it, came back, retested it, used it as support. Okay. Now we broke above this level with these candles. This was a higher risk trade because we did want to see price eventually break this high before we entered. So it was a little risky. Like I pointed out on the previous one of why we didn't take it on a different candle, it would be because we wanted to see price break this structure. Now, mind me, this is on the 15-minute time frame. It did break it on the hourly. We're just a little bit early, but the confirmations and the setup was right. So now that we have our entry, let's talk about our stops and targets. So in this video, I really want to focus on taking your stops and your targets. You find your entry, you have your entry time frame, you use your multi-timeframe analysis, and you find your entry time frame, and then that is where you find your stops. So it's not difficult. I'm not going to say it's easy, but it's not difficult. It's simple. It's simple. Trading is simple, not easy. It's a simple concept. Buy low, sell high, higher highs, higher lows, lower highs. All these are simple concepts, but it's not necessarily easy. But to make it easy and simple, the reason we put our stop loss, the reason I put my stop loss down here was because it is below the low. So So I do not want to be in this trade if price is breaking structure to the downside. I do not want to be buying a market that is creating lower lows and lower highs. I want to be buying a market that's creating higher highs and higher lows on its way up. Now keep that in mind as to why we entered here. Previous resistance, now turn support. Keep that in mind. Now our stops, lower lows, lower highs. We don't want to be buying that market. So we want to put our stop below the low, because if that low is broken, we want to be out of the market. Now targets. Targets are taking on your higher time frames. Now for this, what we did have, and I'll tell you this, like I said, price came down and failed to break below the low. Stopping here, inverted head and shoulders. So this impulse to the upside, this correction down, this whole structure, because this whole structure is what I'm looking at, because this is an impulse and a correction and an impulse to the upside. Now as well, this is an impulse and a correction and an impulse to the downside. But now that we have an M formation, we want to see it completed at the neckline. Just the same way we do a W formation, we want to see it completed at the neckline. Just the same way we want to see the M formation completed at the neckline. Just the same way we want to see a W formation complete at the neckline. That's just the completion of the formation. So keeping the charts clean, let me get rid of this. So a little example, come down, come up, come down, come up. Overextended W. What do we want to see? Completion at the neckline. Okay, another market example. Push up, push down, push up, push down. What do we want to see? Completion at the neckline. We get the completion at the neckline. So with that being said, now that you know that, these are patterns that have a high completion rate. The M and the W formations complete at the neckline. Those patterns complete above 80% of the time on all time frames. Now, on the hourly, we got the break above where we wanted to see. If we zoom out, as I was talking about earlier, we got the break above on the hourly. It happens on all time. It happens 80% of the time across all time frames. Now back to the 5 minute. Oh, I was talking about higher time frame take profits. So we want to see it complete. So our completions complete 80% of the time across all time frames. Now back to our target. Like I said, targets are taking on higher time frames and your stops are put on your lower time frames. This is how you get a favorable risk to reward. 2 and above, 1 and above, 1.5 above. You want to get some positive risk to reward ratios. Now for me, what I know is after an impulse and a correction, if I want information on the next impulse, I need to take my Fibonacci from the low of that impulse to the high of that impulse, and I will get a negative 27 completion area. So price will complete somewhere around here. I originally had it right here, but then I thought my higher time frame bias. Price will more likely attract to this area. So I put my targets right around here, giving us a nice 3.35 or whatever it was, a nice 3.35 risk to reward ratio. So that's how my targets were taken, was on the overall structure. So I was looking at this whole picture on the hourly time frame to find my take profit target. Now on the 5 minute time frame, we'll go back, keep the charts clean. We'll go back. Now on the 5 minute time frame, we found our stops by putting our stop below the recent low. So price came down. This was the most recent low that it made before all this push up. This is the low of the lowest lows. If it starts to break this low, then we should continue formation down and create lower lows and lower highs. Simple as that. We found a favorable risk to reward. Now remember about why we put our stops there and why we entered. We entered on structure, put our stops below structure. Once we're entered, price then triggers us up. We are in profit, and where was it? We waited around. Should let me do this. Okay, so remember why we put our stops below structure, and remember why we put our stops below the low. We put it below structure. Remember why we enter at structure. That's all I'm gonna tell you about this next section. I'm giving you free game, but I can't give you too much free game. So price came down, tested our entry one more time, and it was at this moment. I'm pretty sure it was at this moment. Let me pull it up. At this moment in time is when I said 637. Just, in the beginning, you got to prove yourself. So not saying they all going to be, I'm not going to always going, but in the beginning, I wanted to show that and prove at 637. So let's find 637. I said to go break even. So 615, one more candle, and we'll go down to the 5. So we'll go 645. So it was at this point, 637, next candle. It was at this point. So right here is why I said go break even. Now, don't be afraid to go break even. The whole point of trading is to protect your capital. It's what you use to trade. If you don't have capital to trade, you can't trade. So you need to protect your capital, but it has to be done in a safe way. It has to be done in the right way. It has to be done correctly in the right way. So all I'm gonna tell you, giving out free game. All I'm gonna tell you is that this moment in time, we went risk-free. Now, when we go risk-free, it doesn't matter. Risk-free, I said risk-free, let it ride. So forget about it, basically. Come back later and see what happened. If it comes back and hit the stop loss at break even, so what? We'll find another trade. We can find and get into trades easy. So it was at this moment that we went risk-free. We move our stop loss to break even. If it comes back and hits our stop loss at break even, it doesn't matter. We'll find another trade. We'll trade another day. We protected our capital. So if we move out, let's move out to about the 15 and we can see price develop. So price came down. We found support. And then from there, price tried to come down again, creating higher highs and higher lows. But ultimately, price went up and hit our target at 177. So that's it. And that's how it happened. We just rode it, held it out. I came back down, let them know, hey, price, we hit take profit, 47 pips. It's gave a little more since then, so 47 plus pips. We had a 3.35 risk to reward ratio. Good job, team. Good job, squad. To everybody who took the signal, free, paid. Everybody took the signal. Good job. Good job if you did take the signal. But that was the premise behind this trade. Hit take profit at 115. We got in it at 315, basically. 315 to 115. That 8 is 11 plus 2 more. So 10 hours, 10-hour trade netted us 3R. So 3 times what we risked, 3.3 times what we risked. That's it. If you enjoyed the video, if you enjoyed the breakdown, if you enjoyed the information or found anything useful to yourself, please drop a comment and let me know what that was. Hit the like button if you like this, subscribe, make sure you have the post notifications turned on so you don't miss it when I do post, because I'm coming with educational, useful content that's free. It's free. You know what I mean? It's free. What can I say? Free after free, you all should be hooked. So hit that link in the description, man. It's free. Go ahead and join it. My personal link where you can DM me on Telegram will be underneath that link as well. If you have any questions, just contact me, man. I'm open. I'll be interacting with all of you all in this video. Drop a comment. I really want to talk to you, interact, see what y'all think, see where you're at. If there's anything you need help with, please let me know. I would be more than glad to make a video on it if I can. Other than that, happy trading, man. I hope you have a green week. I hope you have a profitable day. Follow me on Instagram. See you in the next one. That's too happy.